What's up, you discount Buffett wannabes, meme stock clowns, and Robinhood degenerates? Welcome back to the greatest financial roast on YouTube, aka Trades and Gains. I'm your host, Max Pitts, and this is where your portfolio's feelings don't matter, and neither do yours. Today, Wall Street pulled off a combo move straight out of WWE. The Dow slammed big tech through a table, Trump nuked AI regs, and the options whales showed up swinging harder than a drunk uncle at Thanksgiving. Buckle up because this is going to get darker than a Tesla Q2 earnings call. So first things first, let's break down the news before the options flow gets your knickers twisted here. So if we look at the market snapshot from today, the S&P 500 finished up 0.1%. The Dow Jones was up 1% overall, and the Nasdaq was down 0.8% as big tech wobbled, and Tesla also sunk 5%. The 10-year yield is down to 4.2%, which is the lowest in 2 months. Now, what exactly moved the market? Well, first, Trump's $3.3 trillion tax bill passed by a nose hair. The Dow, it shot up like an Ozempic influencer. Healthcare stocks mooning as far as the eye can see. United Healthcare was up 4.5%. Circle up 6%. Even Robinhood, that roach motel for retail gamblers, ripped 160% year to date. We love to see it though. Meanwhile, big tech took one in the family jewels, with Tesla being down 5%. Yeah, after Elon's open mouth war with Trump, apparently the bromance is on pause and they will not be getting a motel room by the hour together. The bill also nuked national AI protections for the next decade, which sent NVIDIA, Meta, and the whole AI hype train off the rails. Turns out robots still have to play nice with the states. That's a bummer for you, Skynet. Bonds, they dipped again. The 10-year yield is down to 4.2% as well. Yeah, it's the lowest in 2 months, which should make housing bulls do a TikTok dance or some kind of corny ass trend that'll make you want to gouge your eyes out. The S&P was flat, the Nasdaq down almost 1%. Big tech is crying while the Dow parties like it's 1999. It's a sector rotation dumpster fire. We also had Powell holding the line at the ECB forum. Our zaddy, Jay Powell, told an audience in Sintra, Portugal, that tariffs are the big reason the Fed hasn't already cut rates. He said the U.S. economy is still healthy, but hinted that inflation-tied tariffs could take months to truly show up. We also had a nice little data check today. Jolt's job openings jumped to 7.76 million in May, the highest since November of 2024. ISM manufacturing was at 49. It's still in contraction because we need it above 50, or if you remember when we went over our PMI recap. The price paid index jumped, signaling persistent cost pressures, and hiring and quit rates, they are near decade lows. A labor market in stasis, meaning people are just staying where they're at. Labor data is solid, so it looks like we're not going to be able to justify getting a rate cut to protect the labor market because that looks healthy right now. Now let's go ahead and jump on over to our favorite options flow software, Investor Central Club, where, by the way, we just kicked off a new deal to celebrate America's birthday this week. For the next month, for all of July, use the code JULY2025 and you can get 25% off an annual subscription. Anyways, let's go ahead and break down the real filth, the options flow, straight from Investor Central Club DGen Scanner. Now, let's talk about our big money flow first. So, our biggest print of the day today, folks, it was MSTR, that Solana ETF, aka Bitcoin ETF that trades like a Solana meme coin. We saw 142.4 million. No, that is not a typo. 34,440 contracts. They either believe Bitcoin is about to cure cancer or they're as unhinged as a day trader on bath salts and too deep in the Reddit forums. We also saw QQQ stacked $500 puts for August 1st. 50,000 contracts, a $9 million premium, and then they hedged with another 6,000 contracts on the $135 put. You'd think they were building a bomb shelter at this point. We also saw NVIDIA stack July $155 calls and $160 calls, layering contracts like Gordon Ramsay layers butter. Millions in premiums. They are basically telling the market, don't kill my AI fantasy just yet. Tesla, we saw, where's our Tesla? Where's our Tessie Wessie daddy at? 250 puts with 2.57 million for next year, by the way. So it looks like they're expecting Elon to continue on his stupidity trial where he's just going to tank the stock with just word of mouth at this point. We're also seeing some bearishness on SPY with the $585 puts for August 15th, 5,000 contracts with a $2.1 million premium, another 5,000 contracts on the 535p. Fear, my friends, it never dies, and these mofos will never stop hedging you out of positions and trapping you as exit liquidity. Now let's go ahead and look at our unusual scans for the day. We saw AMD come in. We saw AMD come in on the unusual scanner today. Let me see if I can find these. We had 152.50 calls due for next week on the 11th. 223K dropped and a 0.40 average. Looks like someone has some blind optimism there and maybe a little bit too much. We also saw, again, it's those same contracts. So we're also looking at PANW as well. Let's go ahead and pull that up. No, not PANW. We're looking at Apple up here. We had March 20th, 2026, 170 puts, 2.97 million in premiums with a $5.40 average. It looks like someone sees some more downside in Apple as these tariffs have not taken full effect. We also had Tesla come in, 2.57 million on the 250 puts, again, for that February 20th, 2026 expiration. Again, that's just more bearishness. But you also have to keep in mind some of these premiums are insane. So is that something you're going to necessarily play? No, but it also shows you where the big guys are thinking these stocks could head within that time frame as well. So keep that in mind. Coin, which we took a position in today, were the 382.50 calls due for next week. We saw 1.72 million in premiums. I bought 5 contracts of these personally at a 211 average. They got in for 216. I just believe in the blind optimism. Let's ride it until it dies. And then we saw HIMS as well. 320, 2026, $90 calls, 1.32 million. We just saw HIMS with a huge drawback. So is this maybe a person hedging on some upside momentum with the erectile dysfunctional community? You know, maybe, just maybe. But hey, hopefully those wieners stay soft so that stock can continue to go up. Now let's go into the dark pools where things get a little bit murky and dirty and where institutions try to make moves without moving the market, but quietly build and accumulate positions. We saw VU come in as our leader, not shocking, especially with the recent news that just dropped on a $3.3 trillion tax bill. 643.78 million was dropped at the 568 level. SPY, we saw repeat QCTs of 78.4 million every other heartbeat. That's like the IRS trying to hide your tax refund in slow motion. QQQ, we saw a $229 million block. The Nasdaq whale not ready to leave just quite yet. IWM, we saw a block of 263 million. Small caps are getting love for once. We also discussed on stream how the natural rotation when we see SPY start to dump are those big institutions start to move into small caps. Less risk. It's easy for them. AGG, the big bond ETF, 390 million. Safe money is still real money at the end of the day, folks. And then we saw PBUS, 131 million. You can Google it. Nobody knows what it is. Dark pools are honestly just wild that way. So, you want the preview before you chase the bozos. Thursday, we have non-farm payrolls expected, 116,000. That is the big one that we really just care about. July 9th, we have Trump's tariff tantrum deadline. We have ISM services on Thursday too. Friday, we're closed for July 4th. So go ahead and deep throat some glizzies and eat some hot dogs and send me the videos, as Milky Filky will be reposting those on her Twitter. Or you know what? Just go get sunburnt and go look like a burnt lobster when you come to market open on Monday so you can blow your whole portfolio. So what does it all mean exactly? A soft jobs print equals rate cut hopium. Exactly. Hot jobs print, the Fed slams the brakes. Guess what? You're not seeing a rate cut until September if you're lucky, and 2026, a worst case scenario. And Trump going full tariffs equals instant market diarrhea. So watch out for those dumpy dumpies. Be nimble, kids, because I don't want to hear you complaining about how you got fucked over by the market. All right, final word before I let you go. Blow your paycheck on 0 date to expiration YOLOs. Big money showed up the biggest options bets you've seen in months. They stacked hedges on hedges, then slapped calls on top. Then wrote dark pool orders so big they'd drown a blue whale. That's not strategy. That's straight up market schizophrenia. If you think this is calm, you're on the wrong channel. This is clown car week. Trump tax bombs, AI laws nuked, Powell teasing rate cuts, and tariff deadlines you couldn't dodge if you had John Wick's reflexes. Like, subscribe, and drop a comment below. Who's more delusional, Elon or the options whales? Let me know, and I'll see you tomorrow. Assuming this entire charade hasn't collapsed by then, have a great night, and I hate you all.